Another trading setup which I really like is the trend setup. As opposed to the volume accumulation setup, this setup is created when there is a trend, and those trends usually happen after a rotation. So usually what happens, there's a rotation, and after rotation there's a strong trend. The longer the rotation, the stronger the trend usually is. And this setup helps you participate in the trend. So what happens in the trend is that big financial institutions are pushing the price aggressively upwards or downwards. And within the trend, they are adding to their positions. And they do that in small rotations within the trend. And in those rotations, small volume clusters get created. So when there's a trend, there are usually places where the price stops for a while and starts rotating. Then the trend continues, there's another rotation, then the trend continues again. In those places, in those little rotations, the big institutions are adding to their buying positions because they can't really add too much to their positions when the trend is moving fast. They need a little rotations for that. So they do it in those places. And when they do it, you see volume clusters on the volume profile. So if I was to draw a volume profile over this area, then the volume profile would look something like this. It would be very thin, and in those places where the institutions were adding to their volumes, there would be volume clusters like that. All right, those places, this is where the volume clusters are created. This is how it looks like in the real charts. This is a strong trend, and within the trend you can see that there's a rotation, and in the rotation there's the volume cluster. When you compare the volume cluster to other volumes in the trend area, then the volumes in the volume cluster are much more significant than the other volumes. All right, so this is basically what the setup is based on. It's based on a trend and on those volume clusters. So the steps to follow in this setup is, first, you look for a strong trend like this one. And you can do it, for example, on the 30-minute chart when you're doing intraday analysis, all right? 30-minute chart is the ideal time frame. Then within the trend, you identify the heaviest volume clusters within the trend. So in this case, there's only one, and it is this one. After that, you draw a line from the heaviest volume peak and you wait for a pullback. So in this case, the heaviest volumes in the volume cluster were in here. And this is the point of control of the volume cluster. So from this place, you draw a line, as in the picture, you draw this line, and you wait for the price to make it back to the level. All right, so until then you do nothing, you just wait. And when the price hits the level, you enter your trade and your position will be in the direction of the trend. So in this picture, there's an uptrend, so your trade will be a long, all right, because there was an uptrend. You want to participate in the trend, so you want to enter the same direction as the trend is. There is no need to wait for any sort of confirmation. You just enter your trade at first hit. And the reasoning and the logic behind this setup is very similar to the previous setup. It's very similar to the volume accumulation setup. What happens in here is that buyers are pushing the price upwards. Then in here, they are adding to their buying positions to push the price even higher. When the price makes a pullback to the level where the buyers were adding to their positions, where they were adding the most to their positions in here, then those buyers are likely to defend their buying positions, and they are likely to push the price upwards from this place again to defend their positions. Alright, this is reason number one, this setup works. And the reason number two is also the same as in the volume accumulation setup. The sellers who are selling in this place and pushing the price downwards are afraid of those strong buyers. They don't want to risk a fight with them. So what they do is they quit their position in here. They don't want to risk the fight. So they quit the position in here, and by quitting their position, if they are selling, they need to buy. So they start buying, and this pushes the price upwards. Alright, so this is the second reason this level works. It's always combination of those two forces. Sellers who are pushing the price downwards are buying, and buyers who are adding to their volumes in here are also buying. And this pushes the price upwards. And what I also wanted to mention is that you use the flexible profile in the whole trend area. So when there is a trend, you use the flexible profile over the whole trend. So if there's a trend like this, you use the flexible profile to this whole area. You are interested in the whole trend. And if you do that, you will see the most significant volume clusters within the trend. There can be one, there can be two, there can be more than that, there could be 3 or 4, and you can trade all of them. Now there is another example of the trend setup. Again, there is a strong downtrend in here. So as you can see, I used the volume profile in the whole downtrend area to look into the whole downtrend. In this case, the most significant volume cluster is in here. The heaviest volumes within the volume cluster are in here. So I draw a line and I was waiting for a pullback. And when the price hit the level, I enter a short at the first hit. Don't wait for any sort of confirmation, just enter your short at first touch. Alright? Now there is one very strong combination of two trading setups. First setup is the trend setup, and the second setup is the support becoming resistance setup, or vice versa, resistance becoming support setup. This is a setup which I already covered in the price action section. Basically, you want to see something like on this picture. So in the picture, you can see that the price is bouncing off some level, which means that the level was a strong support in the past. This was a strong support, all right? It doesn't matter that, it doesn't need to be that precise, all right? Those reactions, it's enough to have the reaction in a general area, all right? So it doesn't matter that this reaction ends in here, this one ends in here, and this one ends in here, and this one ends in here. It doesn't really matter. You are interested in the general area. So what happens next is that the price goes past this support, making it a resistance. All right, this is the standard support becoming resistance setup. It was a support. When the price went past it, it became a resistance. And when there is the trend, which goes past the strong support, and within the trend, if you spot a volume cluster like this one in the same area where the support became a resistance, then it is very nice confirmation of the level, very nice confluence, and those levels are one of the strongest levels. So in this case, the level would be in here. I went short from this level like this, again at first touch. There doesn't need to be that many reactions to the support. If there was only one, I would be completely happy. So if there was only this one strong rejection, then the price went past the rejection, creating volume cluster, it would also be support, becoming resistance setup. Not as strong as when there are 3 reactions, but even 1 is okay. Even with 1, this combination of setups is very strong with a very high strike rate. Alright, so that's for the theory for the trend setup, and let's now have a look at some charts.